Hi everyone, my name is Fazil Soifu. I'm a partner at Andersen in Mauritius, and I'd like to welcome you all to our post-budget webinar. The national budget has been presented by the Honourable Minister of Finance, Economic Planning and Development last week on June the 11th. It was one of the most anticipated budgets in recent years as the country still battles with the COVID-19 pandemic and its impact on the economy. These are unprecedented times, indeed, and there's no playbook that the minister could rely on. And today we've gathered a distinguished panel of experts to discuss some of the key measures that were announced in the budget and the extent to which, in our panelists' opinion, these measures will take us out or into recovery, revival, and resilience as predicted by the minister. Just a word on Andersen before we start. Andersen is an independent tax and accounting firm in Mauritius. There is no audit arm. We are part of Andersen Global, which is a network of firms present in over 250 locations, including 45 jurisdictions in Africa, and we're growing. Let me introduce our panelists today. Joining us all the way from Singapore, Paul Jones, CEO of the Lux Collective, someone who needs no introduction, especially in our tourism and hospitality industry. Hi, Paul. A bit closer to home, we have Kevin Theovengadam, economist and Africa consultant, and a keen observer and regular commentator of the economic and business landscape in Mauritius. Welcome, Kevin.
Morning.
And much closer to me, actually in the room with me, we have Pierre Dinant, renowned economist with a rich career in finance and banking, again, someone who needs no introduction. Hi, Pierre. Gentlemen, it's a pleasure to have you with us today. And let's start with the key measure that was announced by the minister to set the country on the path to recovery. The first pillar, as he mentioned in his budget, of his strategy is to give an exceptional boost to investment. Now, by itself, very wise decision, nothing controversial about it. But when we take a closer look at this investment program, what we see is that we get a sense of déjà vu with a huge investment announced on public infrastructure, on social projects, from flood management program to enhancing the water supply, transport, social housing, etc., etc. Now, Pierre, if I can turn to you first, a simple question to you: is this sufficient to generate the wealth and create the jobs that the minister is predicting? Now, I must say that the minister also announced the creation of new industries, such as the green industry, the biotech, which is commendable. But is there enough in this budget, considering the fact that the bulk of the expenditure is on such social projects? And especially when the minister talks about an expected growth rate of 9%, now a lot of which is dependent on the pace of recovery in the tourism sector. And I'll come to that later on the webinar with Paul. But perhaps, Pierre, you could give us your first impressions on this mammoth spending plan by the minister.
Well, time will tell. Perhaps regarding the size of the projected increase, we have to remember we are starting from a relatively low base, from a GDP of 441 billion to an expected nearly 500 billion. So this explains the 9%, the 9% increase in GDP. Now, will that? I can sense in your question that you seem to have doubts. I can understand, because the launch of a speech with a long list of all sorts of public works gave the impression that the budget was just about that. We had all that long list, and we were asking ourselves, how are we going to have a GDP, a quality increase instead of a quantity increase? But that being said, there are redeeming features as you go through the budget speech, and you come to such proposals as, well, the reopening of our borders, which is a very good thing indeed. We have a proposal about green energy, which will, the minister says, create jobs and product GDP growth. Of course, all this don't necessarily happen just over one financial year. And but we have to welcome this introduction of solar farms, wind farms, etc. And there is also this national biomass framework, which, by the way, will bring some smiles for the producers of biomass. So there are some features, some projects for further progress with our existing industries, also in the manufacturing sector. We are also promised new financial regulations to modernize our banking financial sector. And of course, this is terribly important, shaping the digital future. So there are interesting proposals in there. It is now a question of knowing whether, well, first they must start, but also secondly, we must ensure that they are brought to fruition, that really all these contribute to an economic growth, which is not just quantity due to public works, particularly, as has been the case over the last sort of period, but really something which is going to be productive and to bring about exports, because this is what we really need in the final analysis.
Thank you, Pierre. We'll come back to exports later in the discussion. But Kevin, if I can turn to you, did the minister have a choice? Given that, when I look around, stimulus packages have been announced in the US, in record stimulus package there, in the UK, in many countries, they're following the same pattern of huge public expenditure. Given that we are in a slumping economy, what could the minister have done or announced differently? And perhaps if you can touch on the role of the private sector in all of this.
Yeah, thanks. First of all, morning, everybody, and afternoon, Paul, who's 6 hours ahead of us or 4 hours ahead of Mauritius. Obviously, when you say, did the minister have a choice? I mean, we always have a choice in life, yeah? So whatever action you take, you have a choice, So absolutely, he did have a choice. If you look at globally, you're right. There's lots of money going into public infrastructure, lots of money going back into bailing out or supporting private sector, lots of money that has gone since last year supporting people on the payroll. Yeah, that's been happening globally. I think what for me is more important is the Mauritian context. If you look at the balance sheet of Mauritius itself, that's where I think we need to focus. It's like you're running a company. It's all about balance sheet, P&L, and cash flow. At the end of the day, cash flow matters. And if you look at Mauritius, for example, we've got structural issues, and that's what we're battling currently, and that's what we're going to battle for a number of years to come. Okay, so just to go, I mean, before I get into the investment that's been announced, Pierre said it as well, which I agree with him. If you flick back the last 5 budgets or the last 10 budgets from 2010, you can clearly see a number of projects basically being repeated. And the classic one, for example, is the construction of a dam in Rivière des Anguilles. That was in 2010, and it's back in the budget. So I think we have to be very careful when we analyze the budget, is how many projects have already been announced year in, year out, and how much progress have been done, and what's the likelihood these are going to be executed this financial year. I think it goes back to execution. So if you think about if a project 10 years ago hasn't been done, what's the likelihood of it being done this year? So big question mark. Yeah, I think for me, I'll tell you, in this global crisis, major institutions like the World Bank, IMF, other organizations as well, are saying there are a number of countries that are going to come back very rapidly, and we're seeing that already happening, like the US, China is having a fantastic growth, etc. And then there are countries that are going to struggle. Unfortunately, I don't want to sound too pessimistic, but I can give you reasons why I believe we're going to struggle to come up on that recovery path, despite the amount of money being injected in infrastructure. Let me just highlight the problems that we have, the structural problems, and which, by the way, the last couple of years, even before COVID-19, the government or the Minister of Finance or the previous Minister of Finance or the previous Ministers of Finance have systematically missed on their forecast every single year, by the way, okay? So 2019, we were meant to have 4% growth on the back of huge investment in infrastructure, including the Metro Express, including the stadium, including the Jeux des Îles. And then the bottom line is in 2019, pre-COVID, we ended up with 3%, not 4%. So that's 25% down on the GDP growth. Yeah, and that was before COVID. So if you look at where we are now, what are the issues that we've got? Structural issues. First of all, year in, year out, our exports are down, have been down even before COVID, and even now post-COVID. And our imports have been up. Our imports are 2.5 times more than export. Not sustainable in the future, okay? Classic pillars of our economy are struggling. I know we're going to talk about financial services later in terms of positive growth, but I'll unpack that later to demonstrate that we are struggling. We are at a crossroad. And that word crossroad, we've known that for many years now, yeah, okay? It's been really slow to get the new pillars out of the stable. If you look at our GDP, the percentage of GDP that comes from new pillars are practically zero. So we've got a huge task in terms of making sure we get these out of the stable and we start generating money. And then if you look at the other issues, we've got inherent deficits. I mean, our trade and budget deficits keeps going on. And you've seen last year, the last financial year, the deficits. We're going to talk about the deficit for this year as well. So we cannot just carry on with these structural issues. And then on top of that, if you look at our debt, I think you mentioned, we're not going to get into the numbers, etc. The back of the envelope, this financial year, our debt to GDP is going to be more than 100%. I mean, I sort of worked it out last night quickly. I think we're sitting around 105% as we speak. Yeah. So there are other issues that we're dealing with. I mean, we can cover these later. So we're going to carry a lot of weight going forward. So I'm not convinced as we speak in this budget that the investment being done, for example, in drain, sewage and whatever, is the investment that's going to pull out Mauritius. I think that's the old paradigm, and we need investment in the new economic sectors, in the new pillars.
Kevin, I think no one underestimates the challenge or the challenges that we as a country, as an economy face today. Even more so now you talk about challenges that existed before. With COVID, these have been exacerbated. So no one underestimates that. You mentioned the debt to GDP ratio is 95% according to the budget. You mentioned the budget deficit, which we're not even taking into account events of the last few days, which may well increase that deficit even more. But the minister expects a target of 5%. Is that achievable according to you?
Sorry, I didn't hear you. 5% of what?
The budget deficit.
No, I don't believe so, because I think if you look at the assumptions, this is where you need to flick through the annexes. I don't believe so, because he's expecting a massive increase in revenue, which I don't believe is going to happen. 40% plus increase in VAT and 45% plus in corporate tax. We all know a lot of companies are struggling. How are you going to? He hasn't increased the tax rate on VAT. He hasn't increased the corporate tax rate either. Thanks God he hasn't done that. But there's no way you're going to have a massive increase in revenue. Okay. So, and then on the other side, if you remember pre-budget, if I'm not mistaken, a month ago, the minister announced that he was going to cut public sector expenses by 25%. And when you flick through the annexes in the budget of Friday, the expenses are the same. So, I cannot see how we're going to have a budget deficit of 5%. And that's why I said to you, I think we need to be very careful when we look at the numbers. And then, these numbers, they're hoping it's going to be driven by the GDP growth of 9%. I can't see that happening either. I think we're going to be sub 5%. for this financial year, and we have to be careful not to mix between calendar and financial year. So all in all, I don't see the budget deficit sitting at 5%. And then I just want to rectify something, which you mentioned, the debt to GDP is around 95% for this coming financial year. But then if you add on, for example, if you add on the 28 billion rupees that the government is getting from the central bank, advance of dividend, and you've add on lately, which I think was announced yesterday or the day before, the 5.5 billion or 6 billion for Betamax, we're sitting on 105% as we speak. So for me, we need to be careful when we look at these numbers. Yeah.
Thank you. You mentioned the tax rate. I mean, yeah, it is commendable that there's been no increase in headline VAT rate. I wouldn't go as far as calling it a no tax budget, given that there are increases in indirect taxes and duties on some products, as we know. Pierre, what are your thoughts on that and what Kevin has just said?
Yes, in actual fact, we know already that if all these figures are realized, the deficit is no longer 25 billion. It is going to be a bit over 30 because of the Betamax case. On top of this, one should remember that to arrive at this 25 or 30 billion now deficit, we are going to have a transfer, not revenue, a transfer from four public institutions: the CEB, the Financial Services Commission, the Mauritius Ports Authority, and the State Trading Corporation. These all taken together represent 11.4 billion, which is transferred from their so-called excess cash to the consolidated fund. So it's not revenue as such, it's a transfer. So far, so good for the consolidated fund, but this does raise the question, is it right to go and take from these institutions some monies which they have in reserve for future projects, and one cannot forget the sad case of the MPA, where what happened last year with some of their equipment not being exactly in good use, in good state. So there it is. So the deficit, when we are talking about the 25 billion and now 30 billion also, is also at that level because there are these transfers of 11.4. That's it.
Thank you, Pierre. Let's move on to the tourism and hospitality sector that undoubtedly has been one of the most severely hit by the pandemic. We welcome the gradual reopening of borders. I think every operator in the sector cannot wait for that to happen. What do you make, Paul, of the announcements concerning the sector and of the forecast of 650,000 tourists over the next 12 months? Is this realistic?
Thank you very much, Fazil, and greetings from Singapore. Thank you for inviting me to this webinar. It's always a pleasure to interact with such eminent colleagues as Kevin and Pierre, and yourself, of course. And I'm always happy to talk about Mauritius and something that's very close to my heart, which is tourism. Of course, I'm absolutely delighted with the announcement. We, as the hospitality industry, in fact, the tourism industry as a whole, have gone through an unprecedented 15 months of closure, and it's been extremely tough. And I would say we're all on our knees with our tongues hanging out, and we are desperate. We are desperate. I must say that I'm grateful for the wisdom of the leadership of the country for their cautiousness. And I believe that the cautious approach to opening up is absolutely spot on. And we're a month away from that. the mid-July opening until the end of September, where would be a stay in resort or stay in hotel vacation for vaccinated tourists, will give an opportunity, first of all, for our team members to get back to work. And one cannot underestimate the damage that this closure has done to the mental health of our team members. You know, when you're forced to remain at home, it really inactive, although we keep all our people active, but still it's quite a strain and stress on the team members and their families. So to get them back to work is so essential in this process. And then the 2.5 months, I believe, gives us an opportunity for all the team members to practice all the protocols, to get those up to speed, which we've been working on in theory in Mauritius. We have other hotels in different destinations where obviously we've been working on those protocols, and we've been able to take that information and that experience back to Mauritius to inform our opening up. I believe it gives us the opportunity to start the ramp-up phase. You always need a ramp-up when you start from zero. You need to get going with the partners, which would be the different distribution channels, all of whom, by the way, are very, very excited about opening up Mauritius. They can't wait, actually, to start commercializing Mauritius. The airline partners are very eager to get their rights approved and schedule flights so that they're bookable on the different channels. And we're ready to get out there to publicize the fact that all our hotels will be open in exactly 1 month. And we absolutely can't wait. You know, when I think of hospitality, when I think of tourism, I think of a very famous saying from President John F. Kennedy that said in 1963 that a rising tide lifts all boats. And I see this rising tide is starting now. And I see that tourism, hospitality is that tide. And I see all the boats are the pillars of the economy, because I think that what we bring is we bring connectivity, we bring global visibility to our island, and we bring an attraction to our island. So therefore, I think that saying is very, very appropriate. And I think that as far as the number of tourists that have been projected, obviously the first 2.5 months are going to be quite a slow build up. Obviously, we'll get going as fast as we can. We'll ramp up. But I think come October, when tourists can come, providing they're vaccinated, can come to the island and enjoy a holiday, they're free to go out, I think it's going to be huge. I think there's pent-up demand that is there, that is present. Whether you look at our traditional markets, I think all around the world, we've seen it in the Maldives when they opened up. And funnily enough, the annual number of tourists from mid-July, when Maldives opened, to the end of this month will be exactly the same figure, 650,000 tourists. So it's quite a coincidence that that number was attained by the Maldives through thick and thin, through the build-up when they opened, plus through several ups and downs. As you know, they've had waves of cases in the Maldives, which has caused different statuses to be in place in different markets, which have impacted the ability for tourists to come to the Maldives. So I think, is it a big number? Yes, it's a big number. I would call it it's a stretch target. I think we'll all go after that number, and I can't be over enthusiastic here. I really believe that come October, you're going to see a lot of people wanting to travel to Mauritius, and I'm confident that all the partners will participate and will be very, very enthusiastic.
Thank you, Paul. It's refreshing and reassuring to hear about your optimism, and I hope it's a contagious optimism all around the island and all around the country and the sector. You talked about the Maldives. The fact that they've opened up already, the fact that the Seychelles have opened up already, do you think we've fallen a bit behind? Do you think travelers, this could be playing at the back of their mind that they'd rather go somewhere where it's been open for some time, it's been tried and tested, as opposed to Mauritius now opening up?
No, I cannot in any way fault Mauritius. Where I live in Singapore, it's also an island with 5 million people. Not 1.4 million people. So Singapore have been and are being extremely cautious, exactly the same way as Mauritius is being cautious. The borders here are closed. They have not made any announcements here in Singapore about when the borders will open. So I cannot criticize Mauritius. I think it has been essential to keep the borders closed for two reasons. First of all, we didn't know anything about this virus when it hit. So we had to learn about it. And then we had to, from learning about it, we went from a containment process to a learning to live with the virus, which is where I think we are now, and where I think most countries around the world are getting to. Because the sooner you can anticipate that you have to learn to live with the virus, then you say, well, what do I have to do? Well, the first thing an individual has to do is to get him or herself vaccinated, because only through the vaccination can you achieve some personal protection from the virus. So that is the first thing. Second thing an individual can do is to encourage their family, their friends to get vaccinated, so that we achieve a greater number of people vaccinated. Here in Mauritius, we're about at 16% have received 2 doses. So is that good? I think it's not bad. Could it be better? Of course. They're now in Mauritius vaccinating at the rate of 14,000 a day. Could that be increased? Of course it can. So we need to ramp that up. We in our hotels, for example, we've achieved 95% of our team members have been vaccinated. And 30% of the families have been vaccinated. But we know we have to get to 100%. We have to get there of both the team members and their families. So I think the fact that what we are doing now in announcing this opening up in July, we're saying a few things. We're saying, number one, you have to be vaccinated if you want to visit our island. I think that's a very, very good thing. Number two, our team members who will serve you in the hotel and who are present in the hotel all have been vaccinated, and their family members have also been vaccinated. I think that's a very powerful message, which, by the way, was not the message of the Maldives. It's not the message of Thailand. They are opening up in July in Phuket. They have not announced that the staff will be vaccinated. Why? Because their vaccination rate is extremely low in Thailand. And I know you want to come on to that a little later. I'll talk a little bit about that later on, about Asia. So I think what we've done in Mauritius in learning to live with the virus has been so essential, because you have to have the experience of having outbreaks, of setting up a contact tracing system, so that you're able to snuff out the outbreaks and you know what to do in certain cases. So I think we have that expertise, we have that experience now, and we're able to, I believe, send a message which says we've had this number of cases, which comparatively is extremely low. We've had this number of deaths, which is extremely low. And now this is our vaccination rate, which I think is on track to be among the leaders in certainly in the Commonwealth destinations and in many destinations around the world. Does it compare with Seychelles, you ask me? No. Seychelles, smaller population, they've vaccinated more than 70% of their population. Have they had problems since they opened up? Of course they have. They've had problems. So I think it's all a matter of the planning and the timing. And I think Mauritius has got it spot on. I think the July, we're right, we're ready. Have we gone through pain? We've gone through enormous pain and suffering. And I'm grateful that government have, in fact, decided to continue the wage support scheme until October. I think that's been very, very necessary. But, once we open up, we'll be able to start generating revenue, and the tourists that come will start generating more revenue, and that'll multiply into the different sectors, and will be able to impact on the lives of many, many Mauritians. So and I think the population as a whole should be very proud of Mauritius, of our country, the way it's handled the virus, and proud of the fact that the country has taken the well-being of the population to heart, as we do. We take the well-being of our team members to heart, and therefore we would never want to put our team members at risk in any of our hotels. So it is a very essential ingredient. So I think we got it absolutely spot on, and we're raring to go.
So are we, and I think everyone in Mauritius is really looking forward to the opening up and to the tourism sector sort of getting back to itself as we've known it. And it's great that in timing-wise, the full opening up coincides with the start of our summer, which of course is the peak season. So let's hope that indeed, we will have that, the arrivals that we're expecting, to give a new energy to the sector. Kevin, I believe you wanted to touch on one or two things that Paul has said.
Yeah, no, absolutely. Listen, I agree with with a number of things that Paul said. Obviously, I think we need to look at the context as well, because pre-COVID-19, 2019, in 2019, there was around 1.5 billion of people who traveled for tourism globally. I think it's important to understand that, okay? Out of that, if you look at the mid-market, so your mid-market down, have been impacted heavily. I mean, the numbers are there. Basically, your middle class globally are the ones who've been more severely impacted. We know that, okay? So when you look at Mauritius, we historically, we haven't been only in the high end. I mean, we kind of a bastardized product. So we've got tourists who come into Mauritius with €1,000 package, and we've got tourists who come in with a €10,000 package plus. Yeah. So the €1,000, I think they're going to be severely impacted, and I think we need to watch out in terms of what's the uptake for that market segment. And here I'm thinking more about in the Mauritian market. I'm thinking more about your 3-star, 2-star hotels in Mauritius, where they've traditionally been getting those kind of customers. So I think there it's kind of it's not going to be as green as what, for example, we're seeing in Maldives for that particular segment. Okay. Now, if you look at Maldives, which I agree as well, the numbers are looking good for Maldives from Jan to I think last week, first week of June, they're sitting with 500,000 tourists. So that's a good number. If you look at Seychelles, they're running with 60% of what they used to in 2019. Yeah. But then we have to take into the context that as we speak now, if you're sitting in wherever and you're vaccinated in wherever you are in France or whatever, or Europe or Israel or Dubai, you want to travel, the bottom line is, as we speak today, there are very few destinations that are open. That's what it is. Yeah. So we have to be very careful when we talk about numbers and the impact for Mauritius. And that's where the strategy of Maldives and Seychelles, I believe, was smart, because you get out of the block, you get the presence out of there, and you grasp the market. And we've seen it. Yeah. Both jurisdictions are doing extremely well. I mean, Paul can talk about Lux. There are other hoteliers in Mauritius that are based in Seychelles as well. You know, and you are seeing the markets. The market is what I believe the next year, until eventually the market will settle, is over the next year, we need to grab wherever the market is. That's what jurisdiction is doing. So we cannot stay in this silo thinking of, oh, we used to have 60% plus Europeans, French, Germans, and whatever, and we're going to wait for them. Maldives, for example, the top market in Maldives as we speak today, this year, it's Russia, India. And then if you look at other markets, they're even getting people from Ukraine, from Romania, from Kazakhstan, and whatever. So Seychelles, you know, even before the second wave, etc., opened the route to Israel, you know, and they had 1 or 2 flights per day from Tel Aviv. And more importantly, the Israeli market is an interesting market because now they can fly through Dubai to Mauritius, for example. So for me, the strategy should be about, we need to analyze whichever markets that are open, and we just need to grow. Yeah. Now, the important thing is we need to get out of the block. Between now and October, what I hope is our other competitors who are still on the block, I'm hoping that they don't get out before us, because if they do, then it's not gonna be that straightforward. Then we can end up into a price war, okay? Because the supply of hotels globally hasn't gone down as we speak, but the demand absolutely is not going to be back to 1.5 billion of 2019. So there's going to be that mismatch, which we need to watch out. Yeah. Having said that, I think it's important that we get out of the block. And I think it's extremely important. I mean, I agree with Paul, but I always believe we should have done better. Today, we are June. We should have had 50% of the population vaxxed in Mauritius. Yeah, we're not there. Okay, fair enough. Now we need to get the maximum people vaxxed over the next 2-3 months. And I'm happy to hear that there are public-private partnerships, initiatives in terms of ensuring that we can deliver, or the authorities and private sector can actually get 10,000 plus people vaxxed per day. But we need to get the vaccines themselves. So wherever they're coming from, be it Russia or whatever, we just need to get the vaccines. Now, in terms of the future, this is what I believe, and I think it's good to have Paul on the line as well, because he might give his views. I don't believe you can come out of this post-COVID for Mauritius and everything stays the same. All the hoteliers, all the hotel groups, all the individual hotels stay the same with the existing management, the same strategy. You know, it's not going to work. We need to do something. So what I do believe is, A, we need to reposition the island globally. And I think here we can take some, there's no harm in copying and pasting what others are doing better. You know, we can learn from others. I think Seychelles is doing extremely well on the digital front, amazingly well. The way they planning, executing their digitalization and marketing on digital rather than traditional billboards. I think there are some things we can learn from there, you know, and there are other things we can learn from Maldives as well. We know we have to live with COVID-19, be it even post-vax. And there are other things which we need to do. And for me, the one thing that I would love us to do, and I know some might not be happy with it, I believe we need a consolidation of the hotel industry in Mauritius. I mean, as we speak today, there are 6 groups. I'm just going to spend 1 minute on those 6 groups. Yeah, it doesn't make sense post-COVID for a group to own stroke manage 2,000 rooms. You need scale in this game going forward. The more rooms you've got under ownership and management, and more importantly under management, the more benefit it brings to you. So I would wish that there is a thinking between some of the stakeholders to consolidate, and the same stakeholders did consolidate in the sugar industry. So why do I wish this? It is if you are a hotel group owning 2,000 rooms, and tomorrow you can merge and consolidate and be part of a 10,000 room portfolio, which are located in Mauritius and Maldives and Seychelles, it's a much attractive value proposition. A, you're going to have bigger scale in terms of rooms. B, you're already covering those 3 islands. C, you can reduce your head office costs and other admin costs, etc. D, you can be more fine-tuning on your procurement costs. E, you will have more leverage with your bankers, and we know who are the bankers in the market. And then what's more important, you're going to have more leverage with your tour operators globally. I mean, that's for me is important. And then imagine, let's dream for 10 seconds. Imagine having a Mauritian branded hotel group in those 3 islands with 10,000 rooms. Okay, that would be unbelievable deal for a private equity firm to get a listing globally somewhere. And Paul, this listing could happen in Singapore, for example. I think we need to be bold. I think we need to be creative, and that's how I see we're going to create share value. I don't believe staying by ourselves, individual groups, is how we're going to create substantial value. More so that a number of hotel groups are currently and even more highly leveraged. So we need to think outside the box. And I think 1 + 1 = 3 is really a possibility that I see out of the hotel industry. Yeah.
Kevin, we've got Paul with us. So I can't move to someone else without giving Paul the droit de réponse to your questions and to your thoughts. I think you're on mute.
I think mute.
Yeah.
Thanks very much, Kevin. You shared a lot of details, which are absolutely accurate when it comes to Maldives. And those are certainly the markets that we've been touching. Russia, Eastern Europe, Ukraine, Brazil even has been huge for us, Israel. So yeah, we where we had to go outside of the traditional markets, we've gone. I think we can do the same here in Mauritius, but clearly we need the air access. I think that obviously Emirates connects with many of the markets that you mentioned, if not all of them. So we can do that. We need to do that. But I think the other thing is that Europe, fortunately, has got quite a good traction, even if they started slowly. They're in the 20s, 20% of their population have been fully vaccinated. And the UK is huge. I mean, it's 42% of the population vaccinated. So for us, obviously, that they still remain very much the market. South Africa is a very close market, but unfortunately their vaccination rate is it's less than 1%. I think it's 0.85. So, if you're insisting, as we are, for all the guests to be vaccinated, we clearly would be more attractive to those countries where they have achieved a higher vaccination rate. So definitely we cannot confine ourselves to the traditional markets. We just got to go everywhere and anywhere, and that's exactly been our strategy. As we opened up the Maldives, we were going everywhere, and we were extremely hungry, and we remain extremely hungry. We will adopt exactly the same strategy for the opening up of Mauritius. So, yeah. Now, your last point. Well, what can I say? We separated our company into Propco, Manco. we realized that the way forward was, in fact, not to own and manage everything. That's not how the industry works. And so we split into a management company, which we are, and we're open for business for third-party management contracts. We're doing extremely well in Asia, particularly in China, where we're signing several management contracts. We're expanding our footprint in China. We're busy in also in the GCC markets. We're busy in Europe as well. And, I'd love to be part of that consolidation, because we've got plenty of capacity to manage more rooms than we have currently on the books. We can do that through multi-branding. We can obviously achieve, because when you try and do that, you need to obviously be careful of conflict of interest. But as long as you have a multi-branded approach, then you can avoid the conflict of interest, as many of the major groups do, where they operate multi-brand in different countries. But far better for, as you say, a Mauritian group to do that. We're very well positioned to do that. We're very hungry. And yes, you're absolutely right. There are economies of scale. There's definitely a greater force in the market, and you're able to achieve, a better positioning for your for what you're selling. And I think, coming back to the destination, Mauritius, I certainly believe that Mauritius needs repackaging and rebranding. I think what we have to offer doesn't need reinventing. It's already been invented, and it is perfect. But Mauritius it is such a beautiful country with beautiful people. The country and the people don't need reinventing. What needs reinventing is the packaging and the branding and how we sell Mauritius. We definitely, and I agree wholeheartedly with Kevin, we need a different approach, a more modern approach. And we ourselves, that's how we function, with different ways of communicating to the customer, communicating with, B2B, with our distribution partners, with our airline partners. So, yeah, and I understand that such a project is on the way. So I think it's a pity that it couldn't have been done in time for the reopening. So we could have reopened and relaunched the Mauritius. But I don't agree with the people who says, oh, we need to reinvent this. It's been invented and it is gorgeous. It is gorgeous. Never put down Mauritius. It is absolutely gorgeous. The people are gorgeous. We don't need to reinvent any of that. We just need to repackage it and reposition it. And then I think we'll really be, we'll be a force to reckon with, for sure. I think we have a lot that neither the Seychelles nor Maldives has, but we have it in Mauritius. So I'm really enthusiastic about the future of Mauritius, especially going forward. So I can't wait to get going.
Thank you, Paul, and thank you, Kevin, for that. Let me turn our attention to another sector, which is one of the most affected as well as following the pandemic, which is the SME sector. And the minister recognized the importance of that sector in the budget when he confirmed that it contributes 1 in 2 jobs. The budget contains some positive measures to boost the sector, from credit schemes to the online marketplace, renewable energy schemes and all that. But it's a sector that, let's face it, is still struggling badly from the pandemic. And there's a concern that a lot more needs to be done, and quite swiftly as well, to give some, as we say, renewed energy to that sector. Yeah, do you think the announcements in the budget give adequate comfort and optimism to the operators in this sector?
The
SME sector.
The SMEs. Well, yes, I have made some notes. Just a question for me to see where are my notes. There is quite a coverage in the budget on the SMEs, and I think it's a good thing to have this, and a number of reductions in fees or things like that. And this, I think, goes in the right direction. And perhaps of importance to mention is the SME Industrial Park in Plaine-Magnan and Villemain. Also, there are interest-free loans, etc. So, and I like this proposal, but the EDB will set up an online marketplace for startups to showcase their products and services. So all these points, to me, they go in the right direction. It is extremely important, effectively, to promote the SMEs, because we are, I think one can say, the largest employers in the country. So the more we help them, the more we help them to get into the export, be able to export what they produce. And also, I have also noticed that when there are projects here when there is what do you call it? We are looking for proposals, competitive proposals. They are going to have some 10% preference, something like that. So this is, I think, in the right direction. It's terribly important to get the SMEs going, provided, however, and there we have to be careful, provided, however, that the products, the services are of good quality. We must not come to the point where we would accept anything. No, but this being said, and I like talking of this, the use of a trademark made in Maurice, whether it is SMEs or other enterprises, we must go for what sort of quality, but then do help the local producers, whether it is in services, it is in small or in goods production, or in transformation of agricultural products. These are the sorts of things which must be encouraged, as long as we ensure that the quality is there.
Thank you, Pierre. One way to boost, and this is I believe strongly in it, one way to boost that SME sector is through digitalization, is through enhancing our human capital. And the budget does talk about shaping a digital future, which I think is good, in a series of announcements which are positive for the sector. Kevin, what role do you think digitalization is going to play, not just for the SME sector, but also for the self-employed? And having the benefit of being based in Africa yourself, how does the pace of digitalization there compare to what you're seeing in what is happening in Mauritius?
Listen, I mean, your first question is what role it has, digitalization. I mean, I'm a big, huge believer. That's where I would have wanted more money to go into. If I go back to your first question when we started the webinar, and you said, there's huge amount of money going to infrastructure, etc. I think that's where I was saying to you is, unfortunately, I'm seeing money being poured into old paradigm, and the new paradigm is here. I mean, people can talk about it, or people cannot understand what it's all about. The bottom line is we are in a new world, and we are in the digital era. That's what it is, okay? And I think we need to understand that, okay? So for me, I would have loved to see in this budget more money to be invested in digitalization of the SME. We need to get people to become literate, tech literate. We need to get SMEs to be sophisticated. We need to get SMEs to understand that about digital, their markets wouldn't necessarily be just Mauritius. Today with digital, that's the paradigm shift. Whatever you do today with tech, your market is global, is regional, it's global. Okay. So these are problems that we've been having for many, many, many years. And today we've got the tools. So what we need to do is we need to acquire, we need to invest, we need to train the people, etc. So for me, for example, I would love to see far more money going into that rather than traditional brick and mortar, for example. The brick and mortar, I'm not saying we should not, but I think we're putting too much money into brick and mortar, okay? I think what we need is in digitalization, in tech, yeah, and training. Now, your second part of the question is around Africa, which is a good, interesting case study because I've lived, breathed Africa for the last 20 years. So I know where it came from 20 years ago. And I'm seeing how quickly a number of countries have gone on the digital accelerator. It's happening. It's not about if it's going to happen. It's already happening. So the interesting thing, what I'm seeing in a number of markets, and here, I'm just going to pick a couple of markets. Obviously, Kenya. I'm going to exclude South Africa because a lot is already happening here. So I'm going to take Kenya, Rwanda, Ethiopia, Nigeria, Ghana, for example. Those five, six markets being underpinned by the youth driving disruption, positive disruption with tech and digitalization. So as we speak today, there are lots of things happening on the continent, which we haven't even thought about in Mauritius. So I'm talking about technology going into different sectors, edutech, health tech, fintech, prop tech, I mean, you name it, yeah. There are lots of things being created. And I'm willing to bet in the next couple of years, we're gonna see a couple of unicorns made in Africa on the digital front, yeah. And which, by the way, will probably also cover Mauritius out of Africa. So this is where I think in the budget, this is where I would love the budget to put money, far more money than what we're doing here. And here, I think it's important that the Ministry of Tech needs to be more visible. The minister and the ministry needs to be more visible. If you look at those other markets, for example, you're seeing the Minister of Tech and the Ministry of Tech driving a lot of things. So they're driving a lot of changes, positive changes with technology. Yeah. So I think this is where I would really like us to get more money. And I think that's one of the ways for SMEs to thrive in the future. Or else I'm afraid a number of SMEs will have to pack up their bags, basically, if they don't join this new bandwagon. So it's not about if, for me, it's about we have to do it. And I wish we get on this new paradigm as soon as possible.
Thank you, Kevin. Paul, what about this, the use of such digitalization and technology in the tourism sector? And at this point, let me say this. The government has made a series of announcements in the budget. Obviously, this is what they plan to do. But we cannot rely on them to single-handedly change things. And it leads me to reflect on what the president of l'AREM, Jean-Michel Pitot, who was here in our very own webinar a couple of weeks before the budget. And he said, perhaps there is a need for the industry to be more creative. So in that context, do you agree with that? And if so, what is required in your view?
Yeah, the hospitality industry is famously lagging when it comes to its adoption of tech and digitization. We have remained and probably will always be quite reliant on people. We're one of the few industries where we manufacture and consume the product in the same place. We're open 24/7. So it's it is a very people-intensive business. We have certainly got wherever we can. So if you think about check-in, if you think about reservations, booking processes, that has been, we've definitely made huge gains in that area. And we've streamlined the process for much in the way that the airlines have done. Plus, we're using apps now a lot more. But it's very difficult to replace that human warmth, that human contact, which is an essential part of what we do and what we offer. And certainly, it's one of the massive strengths of Mauritius. In terms of creativity, I couldn't agree more. I think creativity, we're always encouraging creativity. You know, there are those who are more creative than others, but you cannot stand still in our business. You have to keep creating and looking at the opportunities as to where you can be creative. I mean, what we focus on a lot is the culinary side, the food, the beverage. How can we innovate when it comes to the customer experience with food and beverage? Then in wellness, we're doing a lot of things with our new hotel that we're building in Grand Bay. We've got 4 levels of wellness, including indoor, outdoor, you name it. And we're not just following the trends, but we're observing what motivates people, and what are they doing back home? What do they want to do on holiday? And we're trying to respond in very creative ways. And a lot of people are attracted to what we do in hospitality as examples for design, for example. And so we spend a lot of time on debating the creativity that comes out of the whole design world with many consultants, interior designers, architects, etc., so that we can come up with something that is different and excites the customer in terms of and it's all about their experience. So yeah, we just we need to be on the cutting edge of what we do. Another thing I would like to mention, the example of at Le Morne, where, you know, all our team members participated in the reimagining of Le Morne. And because they participated, they invested themselves in this in the property, and it's now very much part and parcel of who they are. So we're able, through that process, to give people ownership through their own creativity. And of course, it generated an increase in leadership amongst the team, and definitely a collaboration that I've never seen before. So I think that there's every reason to encourage creativity in all sectors in Mauritius, and particularly our own.
I should say that I'm really looking forward to the opening of the hotel in Grand Bay later this year. So let's hope that it will be
Me too.
a resounding success, as you've just said. You mentioned airline a couple of times, and I have to raise this point. You know, for the strategy around not just tourism, around reopening up the economy to professionals, to investors, to students, to retirees, to come and live in Mauritius, and of course tourism. For that strategy to be successful, we need a holistic sort of strategy that involves the agencies, the operators, and the airline functioning normally and ensuring a smooth connectivity. So given the state of our flag career, does that worry you at all, Paul?
Well, of course it worries. It is a cause for worry because we're not exactly sure what is going to happen to Air Mauritius. What we are aware of in the short term is that Air Mauritius will fly. They're already flying to Charles de Gaulle, but they will increase their frequency to Charles de Gaulle, and we understand that there could well be an extension from Charles de Gaulle to Heathrow. For at least one of the flights per week. So we're looking at probably 3 or 4 a week. But yeah, what is happening long term? Nobody can answer the question. So we definitely need to get to some conclusion. We know that South African Airways have arrived at a conclusion with their airline, and with a partial privatization process. So I think it is essential. I've lived with Air Mauritius for many years. There's always been a big debate. How essential is it to have the national carrier? I think at the end, we always come down to this, that it is an advantage in the sense that we know that we can count on the national carrier is always there, and particularly for the point-to-point flights. There are long-haul flights, so we know you get on the plane in Europe and you get off in Mauritius. So it's a huge advantage having the direct non-stop flights. So we definitely need some clarity sooner rather than later on Air Mauritius. And as I say, we've always come down on the fact that it is more useful to have Air Mauritius than not to have Air Mauritius. Certainly Air Mauritius has proved to be adept in generating the partnerships and the alliances with the major carriers as well, and done that extremely well. Plus, they're able to go to places which perhaps other airlines might not wish to go, but perhaps it's more favorable for Mauritius for Air Mauritius to go and establish a route. So yeah, we need Air Mauritius. We need a thriving Air Mauritius. We need a strong Air Mauritius in order to support our industry.
Thank you. Thanks for those thoughts, Paul. I'm conscious of time, and I really want to have a discussion on financial services as well. And actually, picking up from the earlier comment by Kevin, where he mentioned financial services, we have a blueprint for the financial services sector. Let's not forget it. Vision 2030, if I'm not mistaken. But I guess it wasn't in the script that our jurisdiction would be on the blacklist or the grey list, whatever you want to call it. So now there's new challenges, including the ones on the tax side with the OECD's BEPS program, the global minimum tax. And these are features of a new landscape that we will have to adapt to going forward. Now, the minister obviously spoke about all the measures that the government have taken to get the jurisdiction out of those sort of the bad list of high-risk countries. And we all hope that it's a swift exit before the end of the year. But amidst all those international challenges, the competition with the likes of Rwanda and India and our traditional competitors like Singapore and the UAE, Kevin and Pierre, what are your thoughts on the announcements in the budget on the financial services sector? Perhaps if I can ask Kevin first your thoughts, then we'll turn to Pierre.
I think, Fazil, first of all, we should have never, and I'm going to repeat it, we should have never been on the blacklist. That's numero uno, as they say, okay? Unfortunately, we're on it, and as you know, this blacklist didn't start in October last year because it came out in the news in April 2010, 2020. Okay. So from April 2020, there are uncertainties in the market, in the global market vis-a-vis Mauritius. And then obviously this thing came into force in October 2020. And now as we speak, we are June 2021. And we know we don't have strong visibility as when we're going to come out. We all wish we could have come out earlier. It hasn't happened. We all wish we're going to come out in the next couple of months. I doubt it. So it could be early next year. So if you look at it, early next year means 2 years. In 2 years, in this world, in the new paradigm, a lot of things happen, and they are happening, by the way. So you've mentioned Rwanda, not only Rwanda. So for example, as we speak right now, I'm seeing a push by Jersey, for example, positioning itself now for Africa, for investments coming from the US routing via the UK, which wasn't the case a year ago or 2 years ago. Okay, I'm seeing also Rwanda now, obviously having signed the MOU with CDC with the UK. We're seeing a number of DFIs now exploring the avenue of using Rwanda, but it's not necessarily on the DTAs between Rwanda and other countries. I think there are more other strategic issues in terms of why they're using Rwanda. But the bottom line is a number of DFIs are now going to use Rwanda going forward. Okay, I'm also seeing Dubai. Dubai for me has done the unbelievable in this crisis. A lot of people now are saying, and even people who didn't like Dubai, by the way, they've always seen Dubai as a sort of man-made product, etc. People now saying Dubai was able to be fully functional during the pandemic. People were still able to fly in and out of Africa, were still able to fly in other jurisdictions via Dubai, and they were still able to trade and open up business, etc. So we are seeing lots of investments currently being routed via Dubai as well. So the competition is there. I mean, it's not about if it's going to come. And I think here, my worry is we're losing time again here. We're losing time. We need to get out of that blacklist and grey list. And then we need to catch up, basically, the time that we've lost, a year and a half. Now, the bottom line is it comes down to execution. I mean, we all know the inherent problems we have in the sector, okay? So the cleanup needs to be done. And for the cleanup to be able to be done in the sector, we need the institutions to have the resources to be able to do the cleanup. Now, I agree that the FSC, for example, which is a key institution, has started doing a lot of work. I mean, I'm sure a lot of management companies and global companies have had the FSC at their doorstep, asking for papers, controlling, checking, and whatever, etc. That's part of it. But I think there are major cleanups that needs to be done, especially with, unfortunately, I'm going to say this, especially with very small boutique, on guillemets, management companies. Those are one-man band management companies that were probably set up the last 5-6 years, etc. And I think the cleanup needs to be done there. So bottom line for me, it's execution. Now, how do you execute? You need to put money and recruit the people. So that's where it is. Now, what I'm worried about is one thing has been announced in the budget. What I'm worried is we get to next year and not much would have been done by then. Why I'm saying this is a year ago, for example, if you look at the National Audit Report a year ago, so I'm talking 2020 or 2019, actually, they've requested for a lot of money. They've requested to recruit around 30 people. And then when you look at the report, which they issued 2 months ago, they only recruited like 2 out of 30 people. So how do you execute when you can't even recruit people and you can't even have the human capital to do the stuff? So the bottom line is it's not about slogans and wishful thinking. We just need to execute. Execution. That's what we need to do.
Thank you, Kevin. Pierre?
Yes. Obviously, we have now to catch up on a situation which is far from good. I am aware that there is a lot of work being done now to get things back in order. But I have often been very pessimistic about the future of that sector. But I begin to be a bit less pessimistic, if only to say that the judgment we received yesterday on Betamax proves that when there is a problem in law, when there is a litige, when we can go up to an outside court with a lot of reputation. This is terribly important to my mind for investors into Mauritius. This has always been like that, but there we have a glaring example of what can happen. It is terribly important. I am not going to make judgmental comments on Rwanda or elsewhere, but I think when you talk of Mauritius, you know that if tomorrow you have a problem, you can have it settled finally in the courts. Although it is unfortunate that all this takes a lot of time. And coming back to the budget, I note that there are in the budget some proposals regarding ease of doing business. And this is important, of course, in the financial sector. And what I would hope, however, they say that they are going to automate public services. I am aware that sometimes when you have tax problems here, it takes a lot of time to get a decision. That sort of thing, all these small sorts of things, they count. I know that overall we don't have a very good, as before, because of we are on the blacklist. But given that we have the people here, by the way, Mauritius is one of the countries with the largest number of qualified accountants per head of population. We have the lawyers, so we have an independent law system. So all this is terribly important, particularly towards investors. I know that we have been attracting investors mainly for tax purposes. Now this is out. We know this is finished. DTAs are out. Joe Biden also with his proposal, which has been approved by all the major countries. So we have now to work on services. I am confident we can work on services, but this is going to depend on our human capital and, of course, on the regulations, on the way that the regulations are put into practice, that they become friendly to investors who are going to use our platform, hopefully, to invest into particularly the African countries where a lot of investment is certainly needed.
Thank you.
Sorry, Fazil, if you don't mind, Fazil, I just wanted to add one more thing, yeah?
Sure.
Because I know you mentioned that earlier on. I mean, you said at your introduction that the financial services industry obviously encapsulates a lot of things, banking and non-banking and management companies, etc. You said it's one of the very few sectors that actually came up with a positive growth in 2020. Yep. So the official statistics, and that's why we need to be careful. You know, the official stats basically demonstrate, I think it's 1% growth or 1.1% growth last year. But the bottom line is, if you split into two, if you take global business, for example, you know, management companies, etc., the revenue streams for management companies are in Forex, in dollars. They bill in dollars and the costs are in local currency. And we all know last year, the rupee depreciated by 10% plus against the dollar. So if you look in real terms in dollar, we're actually minus. So I'm throwing this out here. You know, we have to understand what's happening. And my worry is we don't analyze enough and dig in enough and look at what our competitors are doing and how market share are being taken from us. And for me, I think this year, if we don't restructure the financial services sector, if we don't execute and make sure that we get off of the blacklist, I'm worried that this 1% next year, 1% in rupee terms, by the way, which in dollar is actually minus, the minus will be probably double digit next year. So that's my worry, is we're getting on the other side of the bell curve on that one, which is on the declining side.
Thanks, Kevin. I think the Africa story is great, but the reality is that, Pierre, as you've mentioned, the tax incentives are going away. At the end of this month, we know that the deem frame, the automatic 3% for GBC1s will not exist anymore. The GBC2s have been phased, or will have been phased out. The tax treaties, obviously, and we are seeing all the legacy structures into India are being wound up, and no new investment is replacing them. So whilst the Africa sort of strategy and prospect is great, we're yet to see that level of volume and that level of activity that would make us a sort of a sustainable financial center. So let's hope, I'm positive that as an industry, we can, re-engineer ourselves to face the challenges of the future, like we have for so many years. But certainly there's increasing number of challenges that we, and that's going to increase even further in years to come. On that note, let me invite you all for some concluding remarks, starting with Paul.
Thank you very much. Yeah, for me, obviously the vaccination program is clearly the most important thing that we need to focus on. I think the numbers are not where they should be, and one thing that I promised I would talk about, and I'll talk about it very, very quickly. But the example of Asia. If you remember early on, Asia was being hailed as the example for the world. Taiwan, South Korea, Vietnam, they all had very low numbers. And what happened, and it's very interesting to learn from what happened, they did have very low numbers. As a result, they didn't get the experience in how to live with the virus because they didn't have the virus or not much of it. And the other thing is they scaled back when it came to vaccinations. So now most of the countries in Asia have single-digit vaccination rates. It's very surprising whether you talk about Japan, South Korea, Taiwan, Vietnam, single-digit, all around 5-6%, even Australia and New Zealand, exactly the same. So what happened, the virus came and hit them, and hit hard. And particularly this new Delta variant has been a massive factor in the spread around Asia. Singapore is different. Singapore currently, a third of the population have received 2 doses. So Singapore concentrated on everything. Contact tracing, vaccination, you name it, they laid in stocks, they brought forward their vaccinations. So they had enough stocks, and the entire country should be fully vaccinated within the next 3-4 months. So Singapore is definitely now the example in Asia. China is trying to catch up. They're trying to get to 40% by the end of July. So they've had outbreaks in Guangzhou, a massive Delta variant outbreak, which is causing problem. So why I'm mentioning all of that is Mauritius can never go to sleep at the switch. We have to be extremely cautious. And the way to live with the virus as individuals is to get vaccinated. And therefore, we need the facilitation from the authorities to help all individuals, all families, everybody get vaccinated. That's what's going to protect our population, nothing else. That is critical. It's essential and cannot be emphasized enough. Thank you.
Loud and clear, Paul. Pierre? Your concluding remarks, final thoughts?
Well, all I can say is that in this budget, there are good measures. There are perhaps some good measures, provided they are put into practice. The only point which I regret not having seen, no mention really, is the external sector. We know that our imports are largely superior to our exports. In the year to June 2020, we had a deficit of 3.5 billion on the balance of payments. Well, probably we are running towards a larger one this year. No mention there, which means that really what we need to do, and we have signs in the budget that they are thinking of it. We really have to get our production going. And for instance, in the budget, there is a lot of proposals about investment certificates, export development certificates, etc. All these must not just be words, they must be really put into practice so that our economy gets going again. And more than that our export sector gets going. We have talked a lot about tourism. Good. Export of services, excellent. That's our main industry. But we need also to have more exports in our other sectors, which we're not doing so well. We have just talked of the problems of the financial sector, but we have also to look at manufacturing, and not to say also about a reduction of imports through our better agriculture, particularly for our food sector. That's all.
Thank you, Pierre. Kevin?
Well, I agree with Pierre. Listen, 2 years ago, pre-COVID, I wrote a paper saying a recession in this decade, Mauritius will be extremely vulnerable, but I never expected the pandemic, okay? Mauritius had the worst contraction globally, by the way, minus 15% last year is one of the worst in the world, okay? We in the top, okay? So if you look at the balance sheet, like I said to you, it's like running a company. You look at the balance sheet, the cash flow, the P&L, okay? My worry is, as Pierre said, exports are down, imports are up, okay? We haven't come up with new pillars of the economy. Our FDI, we're struggling to get anything beyond $500 million for the last 10 years. I mean, last year we scratched to get $300 million. Debt to GDP, which if I include those two things which I mentioned, the 28 billion plus the Betamax, we're sitting on 105%, 105% of GDP, that's our debt. 75% or 76% of households are currently struggling, according to a survey done by Statistics Mauritius. A number of corporates are highly leveraged. You just need to look at, on the stock exchange, you can see there's an issue on cash flow. And then we've got structural issues, which is basically an aging population and a massive youth unemployment, which exceeds 26%. And we know very well that our youth are not very well geared in terms of new skill set as we speak today for this new world. And then on top of that, you add the black and gray list. And then on top of that, you add basically the fact that the National Audit Report said that there are 35 billion of investments that have been done by government that generate zero return on investments, okay? So when you put all these, interestingly enough, and as you know, currently we are with a budget which is basically pouring more money to the public sector, pouring more money in terms of pension, in a context where, globally speaking, we can see the changes geopolitically between the US and China. We can see the changes of our competitors, Dubai, and a number of countries in Africa. I can tell you the headwinds are massive for Mauritius, and the ingredients, if you do an analysis, it's like going to a doctor. We've got pretty much the same symptoms of what Greece had pre-2008. My big worry is this year, if nothing happens in this year, my big worry is we get caught in the debt spiral and we ended up calling IMF for a bailout line credit. And that would be the worst thing to happen. So for me, this year is the make or break for Mauritius.
Let's hope it's more make and break, Kevin. Thank you very much.
We shouldn't hope, Fazil. We should just work. This is the thing. We should stop hoping. We should just get on and working and create value and create la richesse. That's what we need to do.
It's for all of us to contribute, Kevin. It's for all of us to contribute towards that growth and towards that, hopefully overcoming those challenges. On that note, we've arrived at the end of the webinar. There's obviously a lot more to talk about, and we can go on for hours and hours. But I hope that the audience has enjoyed the discussions. I'd like to thank everyone especially the panelists, for their support and their invaluable insights. On behalf of Andersen, thank you very much. Have a good day and keep safe.
Thank you.
Thank you very much.